Mugur Isărescu, governor of the National Bank of Romania, the longest-serving central bank governor in the world. I'm going to invite you to the podium, Governor, to make your address.
Honorable President of Romania, Governor Sturnaris, Professor Acemoglu of Massachusetts Institute of Technology, President-elect of Jacques Delors Institute, dear chairs of the conference, thank you for your introduction, Your Excellencies, ladies and gentlemen. It is my honor to be here at the Romanian Athenaeum and share my views on the Romanian economic environment with all the distinguished attendants. I'm also keen to convey my warmest greetings to all of the foreign guests of honor here tonight. This prestigious high-level conference is dedicated to public economic policies at a time when such reflections are desirable and essential alike. On this note, allow me to express my personal regards to Governor Sturnaris of Bank of Greece and member of the European Central Bank Governing Council, also distinguished academic personality with extensive economic research in his career. Governor Sturnaris and I, as well as other colleagues leading monetary authorities, are navigating a complex international environment marked by geopolitical tensions and trade disputes. While the Greek and Romanian banking sectors have strengthened significantly and non-performing loans have declined, we still face the challenge of safeguarding the financial stability amid global shocks such as rising energy prices, trade tariffs, and geopolitical conflicts that many disrupt growth and monetary policy decisions. At the same time, the interplay between the fiscal and monetary policy requires the delicate balancing act of maintaining fiscal discipline, supporting sustainable wage and productivity growth, and encouraging investments at the same time while preserving price and financial stability. Indeed, we are steering in challenging times for all economies and sectors, marked by heightened global uncertainty and, in a larger global perspective, geopolitical tensions, military conflicts in our broader neighborhood, fragmentation of traditional trade relationships, as well as reconfigurations of strategic alliances are redefining the environment in which companies and banks operate. The values that are at the very core of the long-standing transatlantic relationship between Europe and the United States have been brought up in the forefront of diplomacy. In such a complex world, economic stability is no longer a passive outcome. Ensuring economic stability is an active policy objective that must be constantly reminded of as a fundamental principle. Sustainable growth cannot be built on macroeconomic imbalances. Stability is not an end by itself. It is the foundation upon which investment, innovation, and social progress can flourish. Ladies and gentlemen, the post-COVID restart of the economies gave way to an inflationary shock, seconded by the energy crisis. Central banks across advanced and emerging economies embark on one of the most forcefully monetary tightening cycles in recent decades. Eastern and Southeastern Europe made no exception. In addition, the war in Ukraine has brought further pressures on the economic stability. Despite these overlapping shocks, monetary policies have been generally adequate and inflation has moderated, yet it remains vulnerable to the renewed supply shocks, commodity price volatility, and geopolitical disruptions. At the same time, fiscal space has narrowed in many countries, Romania included, while public expectations remains high to allow for offsetting, at least in part, the negative social impact. The relationship between monetary normalization, fiscal consolidation, and structural reform has become more delicate. The economies in the southeastern of Europe are highly integrated into the European value chains and are part of the interconnected EU single market. Since the EU Eastern enlargement, cohesion increased and the new member states have closed the gap in terms of income and productivity with the EU, becoming more convergent. The region shares common features: convergence aspirations, exposure to external shocks, and the need to attract long-term investment flows. Regional cooperation within the larger frame of the European Systemic Risk Board, European Banking Authority, Single Resolution Board, and the European Central Bank enhance resilience. Modern payment systems and the digitalization of financial services are among the newest topics discussed in the regional forum, seeking to strengthen the efficiency and performance of our economies. Yet, technological progress must be accompanied by robust risk management frameworks. Ladies and gentlemen, as a governor of the National Bank of Romania, perhaps you expect from me and we like to outline how we at the National Bank view all these developments and how our monetary policy framework is calibrated to preserve stability while supporting sustainable growth. Romania's economy, interconnected with those in Southeastern Europe, is interconnected with all the Europe, undertook continuous efforts and engagement over the past 20 years to accelerate its convergence with the European Union levels. Yet, it still needs positive policy measures and investments to continue the progress path and benefit from the opportunities arising. In the recent years, our economy has demonstrated resilience. This is true. Also, the situation of public finance is facing the pressures for the past high budgetary expenditures. Growth has continued, albeit at a more moderate pace, supported by investment, EU funds absorption, and a still robust labor market. At the same time, we face structural vulnerabilities, a persistent current account deficit, fiscal imbalances, and sensitivity to external financing conditions. The interlinkages between fiscal and monetary conditions underlines the fact that the path forward requires, among others, but compulsory, a gradual and credible fiscal consolidation, continuous structural reforms to enhance productivity, an effective absorption of European funds, and strengthening the institutional credibility. Inflation, which peaked under the impact of energy and food prices shocks after the COVID, had been on a downward trajectory up to the last summer, when it was a flare-up as a result of supply-side shocks, energy prices, and tax increases caused by the fiscal adjustment measures. According to the National Bank of Romania's latest assessment on the inflation outlook, the underlying pressures on prices dynamics continue to require our full vigilance. The ongoing conflict in the Middle East generates significant risks, including upward pressures on energy prices, deterioration of economic growth prospects, and heightened risk aversion in international financial markets. Should the conflict prove protracted, its impact on the economy, not only Romania generally, could be severe. Notwithstanding, in our case, notwithstanding with this risk, fiscal adjustment must continue. It is true that when inflation accelerates, purchasing power erodes. When geopolitical risks rise, precautionary saving increases. Consumer confidence becomes more fragile, and consumption patterns adjust, sometimes severely. However, the National Bank of Romania should maintain a firm stance to anchor inflationary expectation and safeguard financial stability. Our decisions are grounded in a comprehensive analysis of domestic conditions, external developments, and the risk scenarios that are transparently reflected in the published minutes of our monetary policy meetings. In parallel, Romania's external position and the balance of payments data underline the importance of maintaining international investors' confidence and ensuring sustainable financing conditions. We have adequately preserved our international reserves levels for them to be an essential buffer, acting as an anchor of confidence next to the stability of the exchange rate, our exchange rate, low exchange rate, within the flexible regime. In this environment, impacted by volatility and uncertainty, the central bank's role is not to eliminate uncertainty. This is impossible. But to prevent uncertainty from turning into instability. Our monetary policy framework has price stability as the primary objective. However, price stability is linked with financial stability. These two policies dimensions raise the challenge of several trade-offs, some of them severe. How to act decisively against inflation without unduly constraining economic activity. How to preserve the exchange rate stability while maintaining its flexibility. And how to support credit intermediation while safeguarding prudential lending standards. To navigate these trade-offs, we rely on the data-driven and forward-looking approach on public communication to anchor expectations and on close cooperation within the National Committee for Macroprudential Oversight, recognizing that macroeconomic stability requires policy coherence. In the current global context, coordination at the European level is equally vital, as geopolitical tensions intersect with economic policy, be it through sanctions, trade measures, or strategic investment program. Central banks must carefully assess second-round effects on inflation and financial stability. In this context, the National Bank of Romania will continue to act with prudence, professionalism, and independence. Our mandate compels us to look beyond short-term fluctuations and to safeguard long-term stability. Now, ladies and gentlemen, let me conclude. We live in an era when economic policy needs to respond to critical shocks that include various major determinants such as climate change, digital and new technologies, energy security, defense expenditure, and geopolitics, to mention only some of them. The transatlantic relationship, European integration, and regional cooperation are not abstract diplomatic construct, as they influence the global markets dynamics, the interest rates, the investment flows, the exchange rates, and ultimately the well-being of society. In times of turbulence, more than in other times, credibility becomes one of the most valuable assets of a central bank. Credibility is earned through consistency, communication, and a firm commitment to fulfill the mandate to the best of our abilities. Let this conference be an opportunity to deepen the dialogue, to confront difficult trade-offs. The challenges we are facing are significant. But I could say, with sound policies, institutional strengths, and cooperation at national, European, and transatlantic levels, we can transform uncertainty into resilience, and resilience into long-term prosperity. I do hope this is not a too optimistic view. Thank you for your attention.
Thank you, Governor.